Yeah. Two. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Dale, looking old, so fresh, cold, clean, guys. And you see your boy Cliff, man. You see that thing, man. Take that damn picture for your mom and them guys. And welcome to Real Estate Friday on Thursday, y'all. Man, we know we got our days right, y'all, but we busy. We husbands, we are fathers, and then we businessmen third. Cliff, man, how was week, man? Was week pretty good, man? How was it big time?
Man, good week, short week. We had Memorial Day, so shout out to all the veterans out there who listen in. But
Yes,
yeah, it was a
sir.
good week. So market I think is starting to try to hit more of that bottom, so we're gonna see.
Yeah, yes, sir. Guys, if you're on Instagram, guys, it is pausing for some odd reason off and on. We're going to continue doing the show here, but I'm going to shut it down on Instagram and then restart it again, guys. It's pausing, y'all. I can't. My name is Liddell. My name is not. I don't own Meta. You know what I'm saying? I don't own Meta. That's not me, y'all. But
Yeah.
but ain't no thing about it, guys. I'm gonna log back out and log back in, but we're going to continue moving on forward, guys. So, Cliff, man, Doc, you was in Vegas last week, Doc, man. Did you turn up for your partner, brother?
Oh yeah, man. It was a lot of fun, man. A lot
So,
of fun. How can you not have fun in Vegas? Unless you
yeah,
spend it too
yeah,
much, unless you got that gambling. Yeah.
yeah.
Nah, it was fun though.
Cliff was gone, man. He was gone to Vegas, man. I was working, man. It's all good. He had a good little time. He needed it, man. He's a new father, and when I tell you, y'all, he's a father of a little girl. And for those girl dads, y'all, we already know. We know what time it is. They want. And she wants all his attention,
Yeah.
all the time, all the time. But yeah, man, guys, let's dive into it. 1 second. I'm trying to get Instagram back up again, guys, because everybody named Mama get mad at me, Cliff, man, when the Instagram go down. They get mad at me for real, dog. So I gotta make sure I
Mm.
get it up. Hey Dale. So hold on, y'all. 1 second. Boom. All right, y'all. All right, Instagram, I'm coming. But guys, man, you know how we begin this thing every single week, man. Cliff, I'm getting this up real fast, man. Real quick, man, without going into too deep detail, man. What are you seeing on the market right now, man? What are you seeing right now, man? I know you're going to comment on on the video real fast. What are you seeing as far as when you're out in the field? What are you seeing?
I'm seeing everybody's overvaluing their property. That's what I'm
Ooh.
seeing. People think that their house is worth what it used to be worth, and it's dropped. If you're looking to sell it,
Mm,
you got two choices.
mm,
You can lower the price,
mm,
or you can wait longer.
mm,
And
mm.
if you wait longer, you may drop further. You know what I'm saying? So you gotta make a decision.
He ain't never lied, y'all. He ain't never lied. And you guys are gonna see that in a second. If you guys are on Instagram, we back up. We back up. Hopefully it's not freezing, guys. If it is, guys, don't worry about it. We will re-air it again. But I think we're good to go. But guys, man, let's jump into this thing, guys. One thing we want to get in first is you actually have home builders right now are reducing their prices. You actually heard Cliff just talk about what I call properties already built and what's going on with the pricing structure there. Let's see what these home builders are doing real quickly, guys. These are going to be several videos I want you guys to see. All right. And with these videos, what I want you guys to see is I want you to see exactly what's going on. It's going to be three videos, guys. All right. And they're shorts. They're short. I'm trying to see if I can make it bigger. Let me see. Can I make it bigger? Oh, that's cool. All right, guys. Here we go. Let's get this. Let's see what's going on with the home builders. Here we go.
Across America are now cutting the price on homes. The median sale price for a newly built home is down 15% from its peak 6 to 9 months ago. The reason the builders are cutting the prices is because they're building these new communities like the one behind me, and they're not selling at the original list price. Take a look at this. You can see all the homes that are currently being built here are listed as available. There are no buyers for them at the list price of $350,000 to $380,000. Why is that? Well, it's because we're in the beginning stages of a recession. It's because mortgage rates are back to 7%. So these builders are having to now cut the price in order to get the buyers back into the market, and it's working in some cases. People respond to price cuts. The builders are ahead of the curve on cutting the price, whereas regular homeowners are still delusional. Regular homeowners are not cutting the price, builders are. Eventually, as more and more of these communities get built, the entire housing market is going to follow the builders, so expect more price declines in the second half of 2023.
That's the first one, y'all. All right. And I'm going to let Cliff go.
I want you to take a look at these homes behind me. Newly constructed. 4 of them are available for sale, unsold. The builder is now cutting the price. These houses have been sitting on the market, and this is more of what you're going to see in the 2023 housing market, particularly in cities like Pensacola, Florida, where I am right now. This was a pandemic boomtown. People were moving here. Well, they're not moving here anymore in 2023. And the unfortunate thing for these builders is that when you look at the income in this zip code, it's 27,000 median household income.
Oh.
These houses are on the market for around 400 to 500,000. Who's going to buy it? Who can afford it? No one in this housing market in 2023 with mortgage rates at 6% and the recession on the doorstep. So don't be surprised if in your city you see more and more empty homes sitting on the market for sale, particularly new construction. I want you to take
Ooh, Cliff, brother. That's the third one, but I think that's enough information for the people, Cliff, brother. Cliff, you are a licensed appraiser. What that means is, guys, is he's actively in the market appraising properties, whether it be new construction, single-family residences, SFRs, or new or already built properties that have been renovated or not. Cliff, brother, take what you just heard, brother. Is this accurate, Doc, or is this some cap?
Yeah, I'm 100% accurate. So it's the professionals they know the answer before the amateurs. You know, the home builders know we got to cut now. We need money today. What they're doing is a strategy of buying down your rate. Is you go to them and you say, "Hey, I'm interested. I want to buy it for 380, but 7% interest rate. I can't buy it." So they can go to the bank and they can say, "I can give the bank 20, 30, 40,000 and bring you down to maybe a 6.25." But all that really is doing is trying to bring that interest rate down so that the buyer can afford it. But they're cutting price. It's just a different way of doing it. They're just slicing it different.
That's all they're doing, guys. A friend of mine bought a $2 million home. He does quite well in the financial services arena, and he's a VA, so it's a VA loan, which means he had 100% financing. Cliff, he was able to, as you were saying before, he was able to get a price reduction, but not so much a price reduction, an interest rate reduction through that buyback scenario. So he got a killer deal on I think it was a $2.1 million home in Frisco. Now, to me, I think he paid overpriced for that. That's just my opinion. I just want to do that because the property needs to be some updated. But I digress. That's on me. But the exact same time, man, what Cliff is saying is right. Whether you are building new construction homes, and also if you look at like I get emails from D.R. Horton, Grand Homes, the big boy builders, and what they're saying is we can get you 4%. Now, Cliff, tell them how can new construction builders give such a lower interest rate?
Less risk. They offset their risk with equity, right? So they're like, well, if we at 70%, if we at 65%, we can take on additional risk because the floor for the you gotta understand the banks make their money from the Federal Reserve.
That's right.
So the Federal Reserve numbers, let's say it's 4%, it's somewhere around there right now. They said
Yeah.
we'll make 1% on that money, 1.25.
Hmm.
Now, the only reason why a bank would do that is if the bet is safe. That
Yes.
is a safe bet. And
Yes.
the way they do that is equity.
Yes.
It's 30, 40% equity. Yeah, we
Yes.
might take less interest on that.
Yes. He's spot on, guys. He's spot on. What that does is because builders, what they do is they buy them. Like if a builder's selling a property for 5, 6, 7, 800,000, 1 million, 2 million, they're probably building that property at about a 50% clip. So they have the equity there to justify giving the buyer credits to buy down their rate. It's just more numbers moving on a HUD or an altar. That's all that is. Would you agree, Cliff?
Exactly. It's at the end of the day to the seller, the money the same.
Yes. The money is the exact same. For them, it's like if a builder built it for $100,000, I mean for $500,000, they're selling for $1 million, and let's say that come down to $700,000, they're still making $300,000. They set it for $600,000. They're still making $100,000. And let's say they set it for $700,000, and they give you a $50,000 credit, $100,000 credit, so you can buy down the rate. They're still making $200,000. It's a good deal for them.
Yeah. So like the builder's just trying to stay in business. So
That's it.
some revenue is better than no revenue. So we got to slash, we slash it. But that tells you in the up market how much they make it.
Oh, they are killing the game now. One last video. Now, guys, watch this, guys. Let us show you what the builders are doing because of what's going on now. This is the third one that we were talking about. Let me go to the big ones. Here we go, so you can see what's going on. Listen to this third one, guys. Here we go.
New trend in the housing market, everyone. We have big home builders like D.R. Horton, the largest home builder in America. They are now pulling their homes off the market for sale, and they're trying to rent them out instead. These are the 4 or 5 homes they have completed already to rent. They are all available, no tenants. There are another 55 homes for rent currently under construction. And when they're completed, they're gonna flood the rental market. D.R. Horton, they're trying to get $2,500, $2,600 a month for these 3-bedroom homes. Well, how are they gonna do that when they can't even lease the 5 that they have done already, and they have another 55 coming? You're gonna hear more and more reports about people switching from selling to renting. That's something that's not going to stop the housing crash from happening. It's simply going to cause rents to go down by even more, which is going to cause home buyer demand to go down by more. And it's also going to blow investors out of the water. And don't be surprised if in the end, D.R. Horton ends up actually trying to sell these units when all is said and done.
Oh, Cliffy, Doc. What you think, Doc? Holla at your partner.
Yeah, they gotta do something. They gotta do something, right?
Yeah, they do.
You built a whole community, and in 1 year, interest rates double. You know,
double, Cliff, double, Doc. How do you justify it? Double, man. That is crazy town, bro.
I'm gonna give y'all an inside track. So, I'm an appraiser. I see this every day. I'm in it. I'm looking at the markets. I'm looking at houses every day, right? I see the market, but not just me. Where y'all get me, you got my connections. Y'all know Dale.
For sure.
I got other appraisers I talk to consistently.
Yes.
That are going into that are in the market.
Yes.
And I'm telling you, people don't understand how long they have to wait to sell their property. It's not kicking in. It's not making sense. So you're seeing longer days on market.
Yes, you are.
And now, so Cliff, D.R. Horton's gotta make a dollar any way they can.
Now, Cliff, before we get into the rental price real fast, why is an existing home seller, a property that's already built, not a new home construction builder, a home seller, why are they so dead set on property selling higher than new construction homes? That doesn't make any fiscal sense.
the number one thing I tend to see is people compare their house to their neighbors,
Yes.
and theirs are always better.
Hmm.
My house is better than my neighbors. I said, then why ain't it selling for more? If it
Good
was, it
question.
was sold for more. It's not. So a lot of people, and then realtors are going to tell you what you want to hear.
Yes.
So you're telling me I think I can get 380. The realtor's like, you know what? I think so too. Sign this contract.
Mm-hmm.
You know.
Mm-hmm.
So this is just kind of how the
Mm-hmm.
game works. And so people just have to come understand that if you want to sell it, you got to make it reasonable for the buyer.
That's correct. It is a buyer's market.
Oh yeah.
It is a buyer's market. It could be a buyer's market for a long period of time. Probably for 24 to 36 months. It is.
Mm.
It is. It's gonna be. It is. And also, guys, I tell everybody is, man, I ain't gonna give you the solution yet. All right, we ain't gonna go there yet because there's a way you can sell the property, get what you want if you're not as greedy as you if you're not too greedy up front. There's a way to get that done, guys. But most realtors, because they're salespeople, don't know it, and it's done all the time. As you guys saw, D.R. Horton is selling. Is going to get into the rental game. That's not nothing new. Grand Homes is selling 75% of their trying to sell 75% of their inventory and leasing the other 25%, keeping it on the balance sheet. Why? Because realistically, the line of credit that they actually have, because really to build new construction properties, they have a construction loan. They're making so much profit on these properties before this whole thing happened. What they could do is easily sell 75%, pay off the actual line of credit itself, right? And still cash flow positive on the 25 leasing. And be honest with you, debt free. They're killing the game, guys. We're gonna tell you how in the second, guys. Now, let's go into this real fast. So I say this before I move on. You home sellers, copy what the home builders are doing. Stop being greedy and begin to be creative. Stop being greedy. Be creative. If you're greedy, you're going to stay broke. Stay broke. You know what I'm saying? What's that old saying in Dominoes? Study long, play wrong. Study long, play wrong. You know what I'm saying? So here's another thing, guys. Home Depot losing record profits. You might say, oh, what in the world? I smell an opportunity. Let me tell you in a second reason why. Listen to this report, guys. This right here is affecting the new home builders. Watch, listen to this.
The 2023 recession just hit Home Depot, who just posted their worst revenue miss in 20 years, as homeowners are now pinching pennies amid concerns about the economic outlook. A slowdown you can see reflected in Home Depot's financials, which are now reporting a 9% year-over-year decline in net earnings. Because a big problem for Home Depot is the fact that the U.S. housing market is in a downturn, with data from the National Association of Realtors showing that existing home sales have collapsed back down to 4.3 million on an annualized basis. That's basically at the lowest levels in 2 decades and comparable to what occurred in 2008 at the beginning of the last crash. So few home sales means that there's going to be less opportunity for people to buy appliances and furniture or to do renovations, and thus you can see why Home Depot is struggling. And what concerns me and what should concern you out there is that this situation is likely to get worse throughout the second half of 2023 because mortgage rates are now going back up, with the 30-year fixed mortgage rate now going back up to 6.8%, a figure which is another nail in the coffin on the U.S. housing market because people just simply cannot afford to buy homes in today's market, with your monthly payment to purchase a house now running $4,500 a month in New Jersey, $3,500 a month in Dallas, and $2,900 a month in Nashville. And
Cliff, they go Dallas. I thought it wouldn't affect Dallas though, Cliff. We in Texas. They go Dallas.
What scares me is the
I told you, Cliff. Didn't we say? Oh, Texas is strong. It won't affect Texas. Wrong.
Oh no, it's going to touch, but it does depend.
It does.
Once you get below the average, once you get about 20% below average, that market is strong.
He's right about that. Now, And that comes to knowing how to negotiate and find distressed properties. He just gave y'all a huge lesson right there. Cliff, say that again. Hold on, Cliff. Say that again for the folk in the back row. Now, say that again. Say that again.
If you look at below average priced homes, that market is still strong.
Strong.
You can actually flip in that market.
What you say, Chuck?
You can still flip. If you're in certain areas, you can still flip in that market because it's below average.
Ooh.
You just said Dallas like 3,500.
Mhm.
These homes are priced around 2,000 a month. So people can still afford 2,000. Most people can still put something together. So you still hitting that market. That's my bread and butter market. That's where I focus my time and attention is on that market.
Ooh, y'all. If you ain't writing what he said down, I feel sorry for you. Because on Instagram, it ain't gonna be on Instagram. No, sir.
Well, we giving it away. We giving it away.
Yeah, we giving y'all some gems today. Why? We surely. I hope you got your pen and pad out because we got something coming here in a second. Get your pen and pads out, guys. We ain't done. Let's keep going. Let's keep going with Home Depot, guys. Let's keep going, guys, because some game is coming. Here we go.
The Federal Reserve of America, they seem like they might want to increase interest rates even further in the future, with the Dallas Fed president saying that current data doesn't justify pausing rate hikes yet. Lori Logan said that while there's been some progress in bringing down inflation and cooling the labor market, she says the Fed still has work to do in achieving.
Cliff, didn't I say that they were going to keep raising the rates? Didn't I say that? Didn't I say that?
Yeah, you did.
Man, hey, I'm just, I don't mean to my home, but two. Here we go.
Achieving its goal for price stability, which means that she's likely going to vote for another rate hike increase in June since she's a voting member. However, Jerome Powell just came out today and insinuated that the Fed is unlikely to hike interest rates in June, with the betting markets now assuming that there's a 78% chance that the Fed stands pat and short-term rates stay between 5 and 5.25%. However, what the Fed does in June doesn't really matter because they've already inflicted so much damage on the economy through these interest rate hikes that they're eventually going to be forced to pivot because the economic downturn is going to get so bad that they're just going to have to cut rates. And the reason that I'm predicting this is because I'm looking at the bond market and what the bond market is saying, particularly in terms of the yield curve inversion that's taking place right now. As you can see on this graph of the U.S. Treasury's yield curve, where the short-term yields between 1 month and 1 year are all above 5%, meaning that if you were to buy one of these government bonds, you would get around 5 to 5.5%
Watch
interest.
this.
Now, here's where things get weird with this inverted yield curve. If you were to buy a 10-year U.S. government bond and commit your money for much longer, you would only get a 3.7% interest rate. And if you were to buy a 30-year bond, you would only get a 3.9% interest rate. And this is not normal. A normal looking yield curve in a healthy economy would look like this, with the longer term bonds offering higher returns than the shorter term bonds. And ultimately what today's situation is saying is that the bond market doesn't believe that these short-term yields are going to last into the long term. The bond market is saying that 5%, 5.5% short-term rates and a 6.5%, 7% mortgage rate, that's not going to stay for too much longer because the economy can't handle it and the Fed's going to have to cut. Because going back through US history, every time we've had an inverted yield curve where the long-term yields are lower than the short-term yields, like you can see right now, every other time we've had that, it's directly preceded a recession. Of course, it's not just the yield curve predicting recession. It's all these publicly traded companies. It's US consumers. It's a company like Target, whose quarterly profit just dropped as the company wrestles with a pullback in spending as well as theft that may cost it more than $1 billion this year. Digging into the data specifically, you can see that Target's net earnings were down 6% from where they were a year ago. Historically speaking, when we see these profits decline for these big corporations, that's the predecessor to seeing the big increase in unemployment. Some of you might remember a video I did 3 weeks ago where I talked about Michael Kantrowitz's HOPE index for the US economy. HOPE is an acronym standing for housing, orders, profits, and employment. And thus far, housing, orders, and profits have all gone down while employment hasn't. But that's a situation that's unlikely to last for much longer, especially now that we're starting to see an uptick in unemployment claims in America, which you can see.
Hold on.
You have
We're
bounced
almost
from a
done.
low of 182,000 per week in September 2022 up to a range of about 250,000 per week in May. And ultimately, the hope for you as a home buyer who's waiting for a better deal is that this increase in unemployment claims and the recession is going to cause a wave of forced selling on the U.S. housing market as people all of a sudden lose their jobs or get their hours cut back and have liquidity needs that cause them to have to sell their house. And
Stop right there, guys. Right there. Man, he went in. He went in on that one, Cliff. Cliff, bruh, man, there's a lot of information, Doc. A lot of information we've covered in past Real Estate Lives, man. We've debated a lot of that stuff as well, man. Quick question in your opinion, brother. Where is the economy going, brother? Holla at your partner.
Yeah, we got about 6 more months of decline.
Mm.
I would say strong decline that we're
Strong.
probably going to continue to see. We're going to see the reverse in the stock market. We're actually going to see rallies because the investors, I think, are aware of what's going to end up happening, which is there's a lot of money on the sideline, big money, and
Yes,
it's
it is.
waiting for the opportunity. The opportunity is the Fed stopping. Dale said he's gonna keep going. He's been right. I've been calling for a pause. I'm about 50 basis points away from my initial, my initial thoughts on that. I think we're going exactly what he said. I think right around December, January, you're going to see a reversal, and you're going to see possibly cuts. And we are going to try to cut back until what I think we're going to end up seeing is when you see mortgages drop below, I'd say about 5.5%. When you see mortgages at 5.25, that's when you're going to start. I think that's going to be a longer term trend at that type of interest rate because I don't think we can't hold at this interest rate for long. This is just to slow the economy. Then they're going to cut to kind of bring it back and try to even it out, and then we'll end up about 5.25.
I can understand that rationale. Here's my counter to that, guys. And this is what me and Cliff do all the time. We go back and forth from this. Sometimes he's right, sometimes I'm right as well. So I'm not always right all the time. I can understand his rationale when it comes to the rates, right? But what I think what may be being overlooked is the unemployment rate, and also because of the bond market. The bond market, that inverted curve, that was strong evidence there, because a lot of retirement money has acquired long-term bonds. Well, with the bond market and the treasury market declining or really crashing, those long-term hold bonds, which is what the retirement accounts are, the 401ks, IRAs, Roth IRAs, 403bs, TSPs, they are normally buy those long-term bonds. And unfortunately, they're falling in the same boat that SVB is falling in, because now they're locked into this long-term bond. So basically, most likely they ignored the what the Fed chairman said he's going to raise the rate. They ignored it, and now they're stuck with a long-term bond underwater. That is going to become a lot more normal. Number two, he also mentioned when it comes to the housing as well, because of the bond market, a lot of people, as a good friend of mine, Deontay Ford, talked about. I think majority of the people only have about $25,000 in their retirement. That's nothing. A lot of the lion's share of their wealth is tied in their homestead properties. Well, we just saw home builders are cutting their price points. You have homeowners being stubborn. And now what's happening is you're going to begin to see people's values going down lower, and they're going to be upside down on their mortgage. It sounds the exact same as the bond market as well. Also, both the bond market and the housing market, they're upside down. That means you owe more than what the asset is valued at. That's going to be the reality. Coupled with unemployment rates going up and up and up, it's going to be a bloody later 2023 and 2024. You better get ready.
Yeah.
You agree or disagree?
No, I agree. I think I've been saying it for a while. I agree with some parts. I agree now's the time to get in real estate. Real estate lags the stock market. Right? It's a slow moving cycle. So you can see it coming. To me, this next 6 months is probably the bottom. I've been calling it for a while. We're getting near we're probably calling the bottom of real estate, because they're going to end up cutting, I think, and that's going to spur that market again. It's going to be slight. They're going to cut probably about 50 basis points. Probably do the same they did before. Cut 25%.
Yeah.
The next one 50.
Yeah.
And then probably another 50.
Yeah.
So that's going to drop it. And when they do that over the course of 3-4 months, the real estate market's going to come back because now you're not at 6.5. You're at 5.25.
Now, here's my question though for you, Cliff.
Now it's starting to make sense.
Here's my question for you, Cliff. Let's say that actually happens, right? Now, let's say the rate. You say the rates going down, right? Okay, because the rates are going down, but people are underwater on their mortgages, right? They're underwater. They have manufactured a pay raise via credit card debt. Their savings are going down, as well as the retirement is at $25K or below. How can they afford to get a mortgage?
Well, you still have unemployment at all-time highs. So they still have, even though you have, it's going to go up a little bit more. You're definitely going to have some drop in employment, but that's going to change when they cut rates because now that's going to signal to the market that the cycle is over. The first sign of the cycle being over is them pausing. When you see that, that's why you're seeing the markets rally.
Okay.
Because they see that signal. It's pausing. Okay. The second signal is a cut. When you cut, then you can start betting long term again, right? Because we're out that cycle. So just as a quick, just let me show y'all real quick, right?
Go ahead and show the people. Go ahead. Go show. Here we go.
If you look at the screen, this is the S&P for year to date. This is where it started down here. You see this down here? So it was about 3,800.
Yeah.
That's where we were on January 1st. Today we're at 4,200. So we've gone up significantly over the year to date so far, right?
Okay.
Even today we're at 1%.
Okay.
So you take 3,800 divided by 4,200.
Yeah.
That's almost 10%.
I agree. I can see that.
And that's what I've been calling. That's why I on that 1% made me about a rack today, right? Because and I think you'll continue to see it. And again, the stock market leads the real estate market. I think you're going to continue to see them go higher. You could possibly see 20% return in the S&P this year. I told y'all when I was talking to y'all before, if y'all listen in, I told y'all to get in early. I got in early. I see you around here. I didn't get in here. I got in on this dip right here. See this dip right here? That's when I got in. Boom. Because I saw it reach the low, which has a support.
Sure.
So anyway, I'm just pointing out to y'all that to me, that's the first signal. I look at the stock market as my leading indicator.
Yeah.
Real estate's going to end up following. I think if you buy now at the high interest rates, in about 2 years, when you drop down to a 4.5, 4.75% interest rate, you got a good deal, and then later on you get a good interest rate.
Sure. And what Cliff is talking about, he's talking about you actually buying the property right. He ain't talking about buying retail. Let's just get that off the no. He's talking about, that's why he said buying at 20% under retail. Earlier on in the show, he talked about that. So he's talking about buying at a discount. So so people always ask us, Ladale, what's the better strategy? Should I wholesale? Should I fix and flip? Or should I do a rental strategy? What I always say is, why not do all three? Why not do all three? Learn how to do all three, but it's only predicated on you actually for you learning how to locate distressed properties. That's why Cliff was saying buying at a distressed situation or at a discount situation. The person that understands how to locate distressed properties easily knows how they can look at a deal and say this is a good wholesale deal, fix flip deal, or retail deal. Now, wholesalers, they're getting properties at a discount and wholesaling it to you. That's all they're doing. That's all they're doing. A fix and flip strategy, you're getting it at a discount with the renovation budget so they can exit via sale or refi. A rental is the same thing as a fix and flip. Discount price point, all right? Includes the renovation budget, exit, refinance, cash for the property. It's very simple. So I always say this, guys. This is the reason why we created this course for you. It's very simple. How to locate distressed properties, $97. That's it. People always ask us all the time, Dale, can you mentor us? Cliff, can you mentor us? No problem. We can, no problem. But let's make sure you understand the basics first. And then let's walk through a deal. Let's walk through putting money in your pocket. You get in the bag to actually learning how to do the craft. All right. Now, this one thing. Also, Cliff. Hey, Cliff, real quick, man. Good stuff. Someone said it's all starting to click. Man, that's good, man. I'm glad you're watching, brother. Hope you're getting your value. Now, guys, we got a little surprise for you guys real fast. Me and Cliff were talking, and when we were talking, we said, how can we actually help the people out, right? How can we help people out? So Cliff and I got together, guys, and again, we kind of see what's going on. And as Cliff was saying, now is the best time to invest in real estate. Would you agree, Cliff?
Yeah.
Gotcha.
I think we at the bottom right now.
Okay. I don't think we're at the bottom, but either way it goes, we're not at the bottom or at the bottom. That's for another discussion. But guys, guess what we're putting together, guys? I want y'all to read what's on the screen. We're doing a free real estate masterclass. It is 100% free. Okay, we'll actually put it together, and it's going to be about 20 seats, just 20 seats. Okay, it's 100% free. We'll have everything ready to go as far as sign up for you to book your seat. Right, all we need is your name, email address, and I believe your telephone number. That's it. Just confirm everything as well. 100% free. Now, what do you get in this masterclass? You can ask me and Cliff anything you want. Anything about new construction, fix and flip, rental, capital gains, financing, taxes, wealth management, appraisal, scope of works, LTV, LTC, anything you want is not off the table. Ask us any question you want. All right, we're putting this together. Right, we're putting this together, guys. We want to make sure that it's done the right way, but it's just going to be 20 seats. That is it. Because if it's bigger than that or over 30 seats, then we got a problem. We want to make sure everybody has enough time to ask your question. We can unpack it. We're going to show you the entire game. It's 100% free. We don't know nothing from you but just your name, email address, and your telephone number. Just confirm that it is you. That is it. Cliff, man, we giving away the phone free and with Big Dog.
Oh man, if you got an opportunity to ask, somebody who's how many between me and Dale, we probably looked at 20,000 houses.
Oh yeah, easy.
So this is what we do, So just take advantage. That's all I gotta say. Basically, just take advantage. You got opportunities, asking some questions. Maybe you end up learning something you didn't know. It's free. You don't hurt nothing.
Yes, right now, guys, somebody just asked to win on Instagram. Right now, me and Cliff are looking at the June the 17th. That'll be a Saturday. We wanted you guys to be away from the workplace on the Saturday for about we're looking at about 2 hours, one day alone, 2 hours. Me and Cliff, ask us anything you want. Nothing is off the table. Nothing at all. And also, we're talking about wealth management as well, because once you get the bag, you better know what to do with the bag, specifically in this climate. Ask us anything you want, guys. And it's 100% free. Nothing. If breathing, the only thing it costs is your air. You breathing, getting up. That's it. It's going to be 20 seats. It's going to be super private. Cliff and I. Cliff, man, you want to add anything at all before we exit everything, big dog?
No, man. Just, hey, have a good weekend, and we're going to see y'all back next week. And
again, guys, we'll have the QR code for you next week. We'll have everything set up for you as well also next week, so while we're doing Real Estate Live again, you'll be able to scan the QR code, It'll be the link will be in our bios as well, guys. It's going to be for just 20 seats. That is it. Okay, 20 seats. All right, but guys, man, that's all I have for today, man. Cliff, you want to say anything, man, before we exit, man?
Nah, that's it, man. Same time, we're gonna see y'all Friday next week, man. So
Yeah, and thank y'all
Peace.
for allowing us to come on Thursday. I'm going to town tomorrow, guys, on the business trip for a new construction project in Mississippi, and I'm looking at 20 more acres as well. Oh, that's a surprise for you, Cliff. 20 more acres as well, guys. So we're very, very aggressive, very aggressive. So, guys, you know, we end it every single time, guys, before you leave. And while you can, because, you know, Cliff with his hat on, me, my hat to the side, we look better than you. Don't get mad at us. Take that damn picture and give it to your mom and them. And holler at your partner. Guys, have a good weekend, guys. Peace.
God give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big